Good day, my friends. Let's learn something new today.
Hey everyone. Welcome back to the Free Education Channel. Have you ever wondered why you pay different taxes on the same products in different countries? Well, today, we're diving into the fascinating world of taxation as we explore the differences between GST, or Goods and Services Tax, and VAT, or Value Added Tax. Which one is better for the economy? How are they calculated? Stick around, because we're breaking it all down for you. Let's start with the basics. GST is a comprehensive, single tax that applies to the sales of goods and services from the manufacturer to the consumer. It simplifies the tax structure by consolidating various indirect taxes into one seamless system. On the other hand, VAT is a consumption tax that is levied on the value added to goods and services at each stage of production. Each business in the supply chain collects tax on their sales and can deduct what they paid on their inputs. Sounds complicated? Don't worry, we'll break it down. So what's the difference between them? Let's look at some key distinctions. GST. It's a single tax that replaces numerous other taxes like service tax and excise duty, offering a cleaner system. VAT. It operates through multiple stages in the supply chain, which can sometimes lead to a cascading effect on costs. Let's look at the point of taxation. GST is applied at the final point of sale, making it streamlined for consumers. VAT is applied at each stage of production, which means businesses have to be vigilant about what they collect. GST is more comprehensive as it includes both goods and services. Whereas VAT generally focuses more on goods, with some exceptions for services. Let's look at the revenue collection. GST often results in more stable revenue streams for governments by being broad-based. Whereas VAT might fluctuate based on production cycle. How is each calculated? Now, let's talk calculations. Here's how each tax is calculated. GST calculation. The formula for GST equals sale price times GST rate. For example, if a product sells for $100 and the GST rate is 10%, you'd pay an additional $10 in GST, making your total cost $110. VAT calculation. The formula to calculate VAT equals output tax, input tax. Imagine a manufacturer sells a product for $100, and he has paid $20 in VAT on his materials. If the VAT rate is 10%, he owes only $10 in VAT, reclaiming the tax paid on inputs. This makes VAT more dynamic but also more complex. Let's look at the pros and cons of each. So which is better? Here are some pros and cons. GST pros. Simplifies tax compliance. Reduces the cascading effect of taxation. Lower rates can encourage economic activity. GST cons. Transition can be challenging for businesses. Requires a new setup and ongoing education. VAT pros. Allows businesses to reclaim input taxes. Flexible and can be adjusted easily. VAT cons. Can lead to complex compliance processes. Risks of cascading effect if not properly managed. Overall, whether GST or VAT is better can depend on the economy's structure, the ease of administration, and how well businesses can adapt. There you have it, a clear comparison of GST and VAT. Do you think one is